our next guest that we're going to bring up to the stage is Jas and Simos from REC, and they are going to be teaching you guys about pre-construction investing and how to go through due diligence. So warm welcome in the chat, please, for Jas and Simos. Come on up, guys, and I'll just stand right here to this side.
Thanks for having us, Amanda. How
You're
you doing?
welcome. You're welcome. I'm great, thank you.
It's nice to take the mask off, that's
yes,
for sure.
but remember, you're not supposed to cross that line.
We're not,
so
we know. We're figuring it out, but it's so nice to see you.
You as well.
Thanks for having us.
Thank you for being here. Now, I've got a question before you guys jump into your presentation.
Okay.
And I've been asking all the presenters for the weekend, what is your COVID pivot? So what I mean by that is, how have you adjusted your business in the last year, because you had to better serve your customers and your clients?
Well, obviously, just like you guys have done such an amazing job yourselves from going from a in-person event to going digitally. I think the biggest pivot that we made in our organization, myself, Simos, our leadership team, our 41 agents, was we started a virtual office. What we did in the first couple of months of the lockdown was, because we're so high energy, we want to make sure that we're going from room to room, office to office, that we set up a virtual office, which was really cool, where we all spent time, like 8-9 hours with each other every single day, Monday to Friday, even some Saturdays, which just allowed us to shut out that external noise.
Yep.
It was a very scary time.
Right, that negativity, shut out that negativity, keep each other positive. So I'd say for us, and specifically myself, that was by far the biggest pivot.
Yeah, amazing. Well, congratulations for making it another year on all your success this far, guys.
Awesome.
The stage is yours.
Well, thank you.
You're welcome.
Thank you. All right, Simeon.
Well, I want to give an absolute mega welcome and hello and greetings to every single member of this incredible Keyspire Nation and Keyspire community.
Well, it's really cool because we get to see the chat as well on both sides.
Well, this is insane.
This is insane. The setup is insane. Like, a massive congratulations to everyone on the Keyspire team. Obviously, Scott, Michael, Amanda. I mean, there's so many names to mention, but congratulations. And for all the members that are here right now, the investors that are here, I think close to 500 or over 500 people that are watching, congratulations, you're a day and a half in. You and I have been able to be part of, I think this is our 22nd or 23rd Summit, Keyspire Summit, and it's always evolving. It's always changing.
Well, this is next level.
Well, this is next level.
Next level.
It is.
I mean, everybody's logging in from home.
I know. It's really cool.
So it should be really comfortable. Like, I've just thought through like the energy of the audience, and the first thing I'm going to ask in true REC Keyspire fashion is, tell us where you're logging in from.
Let us know. We want to know. Look, we're seeing some thank you RECs. I'm seeing some familiar names.
We need to know.
We need to know, because we can't touch you. Let's all, maybe we've got to do like a virtual hug or something, just to feel that energy. We're so used to doing this live with all of you. But for some of the people that don't know us right now, like, I want to make sure that we go over that, because in the past years we've done summits, we're always coming up after the good-looking Scott, beautiful hair. Today it was Nelson, and then they bring on.
Why do you bring up these beauty contests?
They bring on a bald, okay-looking Greek guy and an okay-looking Indian guy. But both of us were the co-founders of REC Canada. We manage a team, as I mentioned earlier to Amanda, of 41 agents that cover the Greater Toronto Area and surrounding areas, like kind of in Southern Ontario, as well as 11 support staff. I mean, our leadership team, our VP of Sales, Laura Stewart. We have a director of operations, Bobby Pume, that a lot of you know as well, and our air traffic controller, director of concierge services. He's in the booth right now, virtually. Tyler Ty Walburn. I mean, not much gets done without these guys.
No, actually, nothing gets done, because we keep jibber jabbering and bringing people into our world.
Well, anybody, look, I mean,
somebody has to do the real work.
See, the new people that are coming into our world right now, you're going to get a sense of us very soon, that we love the sound of our own voice. I know the ticker's going on, and at some point Amanda's going to come and grab the hook and get us off. We are going to be speaking about how to invest in pre-construction condos. Some will call it new build condos. But before we go into that, why don't we touch a little bit more of what our team actually services, like the areas that our team services, the type of properties, because we don't just do a new build condos. Why don't you touch on that a little bit, Simeon?
Yeah, so I personally, by trade, I'm a commercial broker. I've been selling hotels, gas stations, plazas, retail, commercial, office, not so much industrial, but some. And I've had a massive focus on putting together assemblies for high rise and changing the use and density of land. But as my duties, as far as our firm is concerned, I run the real estate, our realtors, and our realtor team of just over 40 agents at this point, which I can't believe. We grew exponentially during COVID, which was a blessing in its own right, because we had to service so many more people on such a one-on-one basis because of the distancing, because of all those rules that were imposed. But we typically serve the Greater Horseshoe. We have our specific REC senior agents kind of go from that Bowmanville or Oshawa from the east to just at the fringes of Burlington to the west.
Yeah.
Hamilton, we typically refer to our strategic partners.
Yep.
Some, depending on what the asset class is, we'll take care of ourselves. But for regular income properties, for regular things like that, we typically will defer to, the minute we get into that market, we'll get our partners involved, and many of them are here today. But to the north, we go all the way up to Barrie, Orillia. That's kind of the limits. If it's anything beyond that, we'll engage some of our strategic partners.
Exactly. And I also wanted to speak about the fact that we'll help you with moving up into a bigger home, moving down to a smaller home, as well as multiplexes, anything really up to that 25, 30 doors, up and above, and that number we usually will, again, introduce you to some of our service providers that we've been partnered up with for a very long time. However, if you're new to us and you haven't been in our family, the REC family, we have a treat for you, a gift for you today. That's for everyone watching. It is our copy of our Real Estate Intelligence book. You can get a hard copy. All you have to do is, if you open your browser, or for you slick people out there that are watching on your computer or laptop and going on your cell phone, all you have to do is go to recinsiders.com. That's recinsiders.com. Do you still got to do the www? Like, no, right? You could just say recinsiders.com.
Don't put me on the spot with tech questions.
Well, like you sometimes double down as our tech person. If you go to that site right now, you can click a button. You can get the PDF version of our book, but you can also get a hard copy mailed. We have one for every single person that's watching right now. It's our gift to you, for you, sitting down and watching.
Also, I believe they have the briefcase.
Yes.
So if you were to go to the REC booth and you visit the briefcase, you'll get a digital copy instantly, like it's an instant download.
And Tyler's there.
And Tyler's there. But if anybody wants the hard copy, of course, let us know, and you'll get the hard copy delivered to you right away.
Okay, so let's get into the topic of how to invest into pre-construction condos, new build condos. Obviously, we need to speak about the fact that we get probably about close to 200 investment opportunities. Now, that's new build, that's multiplexes, all the properties that we spoke about a second ago, but we need to definitely educate everyone here and talk about how we narrow down the scope and promote and get loud about the 6 to 10 a year out of that 200.
The majors,
right? Now, I want to speak about our due diligence process. And if you're doing this and you're thinking about doing this in the near future, then I want to make sure that you understand what we do, the 16 years that we've been doing this, the hundreds of collective of years of experience that we have now. I want to make sure that you understand. So let's get that started. It's always based on location. The old adage of location, location, location is true. I know it's maybe some would say a cliche.
Well, Jazzy, I'm going to take you exactly one step back, because location is everything. But when you're investing in the future of any given community, the thing that you need to look at the very top, I'm talking before you look at the location beside the train tracks or the hospital, whatever the case may be, the very first thing, you got to look at the market that you're going into. If you're investing in the future, you need to see a demand. You need to see a shortage in supply. You need to see that development has been greenlit, and it's not being stalled or being fought against by the community itself or other regulation. So when you're looking at markets in Canada specifically, like Toronto, like Vancouver, like Montreal, that are experiencing absolute record shortages of actual housing, and the trajectory and pricing are being shoved up, I think you may want to look at investing in that communities.
And if you take 2020 as an example, I mean, immigration was down by 85%.
Well, the borders are shut down.
Right. And when that happened, I mean, all of us, I mean, through our brunches that we do every other Saturday, through the coffees with Michael that we were on, the amount of conversations that we were having in that first 30 days, because no one understood what was happening in terms of the lockdown. Real estate shut down. Like even you were able to sell homes and see homes, but nobody was making
You're able to finish transactions. That first month, if you were in the middle of a transaction, like somebody sold 3 weeks ago, well, yeah, they have to close.
And now looking at the greater Toronto and surrounding area markets, if at the end of 2020, we still saw an increase of a little over 13.2% overall average increase. Why does that happen? And that happens because of the fact that you want to look at supply and demand. There was a lot of demand still with the borders closed, which we'll talk about in a little bit when these borders open up again, and that's going to be a conversation we're going to have in our forecast, what we're seeing in terms of numbers. But kind of like this gentleman, if you see the screen, you know, there's like one man there, a bunch of ladies. There's a lot of demand, but not a lot of supply for, you know what I mean? And so it's very similar to real estate in that sense. You want to look at a place, you want to look at a market in an area where there is a lot of demand and not a lot of supply. Why? Simply, just like economics 101, values will always move up.
So are you saying that all those ladies are after that one man?
Well, I thought that was me. I don't know if Laura and Steven, our team, put that me in there.
But I can't even do social distancing.
Okay, and so that you definitely want to look. And so let's talk about, and maybe I can go back a slide here. There you go. I want to talk about the what you should be looking for when it comes to location.
100%.
So for me, okay, and this is also based on a study that Harvard did. Okay, Harvard did a study about 2.5 years ago. Where they looked at what happens to values when you're under 300 meters to transit. And what
transit sites,
okay? Values appreciate the most over time, as well as the rentability. So as investors, as we all are, and first and foremost,
the vacancy rate.
The vacancy
and
rate.
absorption.
Well, and the consistency of tenants, right?
That's right.
Because how many times do we hear, Simos, that, okay, I have a tenant in place and I'm looking in the outskirts of our province and I have a tenant in place. The question I've always asked is, well, great, you have a tenant in place now, but do you have, is there going to be a steady flow of tenants? Like, how many times do we come across that conversation?
And are the tenants happy there? Do they want to be there?
And what kind of class of tenant are you getting? What's their income? What type of jobs? And so, generally speaking, the number one thing that we look at is the proximity to transit, which will determine our next few points, which is access to employment.
You bet.
Right? Because you'll know that most tenants want to be very, very close to transit because they can move around. Their lifestyles are going to be better. And then obviously amenities. Talk about some of the amenities that when we're looking at a project, when we're looking at really any investment property, what type of amenities should investors look for?
That's right. Versus, so if a building has luxurious finishes, pools and everything else, is that a good investment? Is it smart for the investor who knows as a fact that over the next 10 years that pool is going to have to be retiled? The pumps, the equipment, the solarium, the retractables, all those things over time are going to need to be replaced. So to go into buildings that have those types of features, unless your investment strategy is specifically looking at the luxury market, would be absolutely the opposite of what you should be doing, because you should be looking at a building that is safe, that is clean, that is practical, that is well located to service the biggest demographic and net possible without the capital expenditures coming down the line in the future. So if you can avoid for example, an indoor pool with retractable canopies, and instead going to a development that has 2 towers with an outdoor pool that's only open 4 months out of the year because we're in Canada, and still affords the residents the luxury and demand that top rent, but not have the bills and the maintenance and the ongoing capital expenditures coming down the pipe, that would be much wiser.
At the end of the day, I mean, we've been here with Keyspire and in the Keyspire community for coming up to now 7-8 years.
That's right.
I think we're doing something well because the boys, Michael and Scott, have kept us around. And look, we're also here to tell you that our job is to essentially get back what you've invested as quickly as possible. What you've invested in yourself for the education, our job today is to get that back for you. And let's start.
Yeah, and everything we bring here, when we bring it here, it is exclusive to here.
And
it is exclusive. So the incentives that we have,
yes,
the inventory that we bring to the table is exclusive. Are you able to buy in a development anywhere else at any time? Of course you can, but you're not going to pay what we get. You're not going to get the incentives that we get, and you're not going to get the access to these developments that we negotiate on your behalf to bring to this very valuable stage.
And I love that you used the word access, because as you can see, the first way that you're going to win when you invest into a pre-construction / new build, it all comes down to the first access of pricing. See, what the builders do is that they know.
And this isn't any asset class.
This is, well,
so any development, any master plan community, low rise, mid rise, high rise. So you can take what you're going to say right now, because I know what you're going to say, into context, into any real estate development.
So how you win in new build / pre-construction investing is by making sure that you purchase in the first access of pricing. Because see, what a builder's going to do is that they're going to force the appreciation, okay? They're going to allocate. So let's take a building of approximately 300 units, okay? The builder, they're going to hype up and make sure that they get the demand. It all comes back to supply and demand. They're going to get the demand, control the supply, because it's their units.
That's right.
And then they're going to allocate out of those 300 units, they're going to allocate maybe about 60 to 70 units in that first stage. The reason they're going to do that is they're going to have those sell, and then the next allocation of units of 50, 60, 70 units, the price is going to go up.
Of course it's going to go up.
And that price goes up
significantly.
And I was going to say, generally speaking, you're looking at about $15,000 to $18,000 just in that from the first stage to the second stage. But the builder's not going to stop there. They're going to allocate a third set of units. And by then, they're probably going to test the waters and allocate those units of an increase of price of $25,000 to $28,000. You see what just happened? The builder just forced, with 2 sets of allocation, they forced the appreciation, the value of the units by approximately $40,000. And we've done 1,600 of these. So, look, I really want to make sure, because the people that are new to our world, yes, we have a lot of energy. Yes, we're 2 good-looking gentlemen, okay?
Very good looking.
Our moms told
Very
us that,
good
so I
looking.
think we are, okay? However, I truly want you to understand it, because we're not trying to impress you with these numbers. It's really coming from the perspective of impressing upon you where all this data is coming from. So we've done, in our career, approximately and helped 1,600 investors. Hundreds upon hundreds of those investors have been Keyspire investors as well. And so we've seen this happen time and time again. Why also is pre-construction investing very advantageous, or a benefit, or a strategy that investors like? I want you to speak about the extended deposit structure, which is different than any other type of strategy, Simos.
That's right. So, as all of you should know at this point, that real estate affords us all the power of leverage, meaning that for every dollar you spend, right off the bat as an investor, you 5x it. Yes?
No, hang on one second. So, no, Simos, please. I want you to take that slow. I want you to go over
Done.
that part of that deposit. Okay. Amanda's not in this room right now, so we're okay. She's not gonna hook us right now. We're good on time, so go. I'm always scared of Amanda. I know who I need to she's not here. So take this part slow.
So I'm gonna pretend that nobody knows the power of leverage, which is the absolute biggest advantage.
And it's just a good reminder too, right? It's just a good reminder.
So to buy real estate as an investor in this country, to get financing in this country, because other markets are different, you need 20% down, as most of us know. That 20%, if I was going to go buy an income property today, I'm going to need to pull 20% out of my bank account, deliver it to my lawyer for closing, 20% down, mortgage takes the rest of the 80%, or 25, 75, whatever the case may be. You close on it, you ride into the sunset, you make your investment. Wonderful. In this specific asset class, and what Jas wants me to be very clinical in you understanding, because this is probably the biggest advantage of it all. If you've determined that the market you're going into is a market that's going to grow, and you're going to put 20% down in total, but this development is not going to be built for another 3 to 4 years. Everybody follow me? So you're buying today, so there's going to be a price that's locked in today, and you're going to be asked to put 20% down over the next 1, 2, 3, 4 years, depending on the development. How is that split up? It's split up with 5% today. In 6 months from now, another 5%. In a year and a half from now, another 5%. 270 days, there's a million different deposit structures. The project that we're bringing today is a ridiculous one that you're all going to be so impressed. Half of you won't even.
You're not allowed to talk about that.
I won't.
But you can't talk.
I
don't want to let that cat out of the bag yet, or out of the briefcase, because I see a lot of briefcase in the chat.
So the whole point of this exercise is the fact that 20% is not due today. So if you're in the middle of saving for your down payment, if you like spreading across different projects, pre-construction becomes an auxiliary investment to existing investors, and it becomes a very easy investment to the first-time investor.
It's actually my favorite type of investment for somebody who's going to become an investor for the first time.
Because you're really easing into everything.
It's so passive. Look, for me personally, my story is I'm a very lazy investor. I'm not Scott McGilvery.
Well, you're a lazy person.
Okay.
You're a lazy person.
That conversation's for later.
You don't even job.
Okay. So I'm not good with the hammer. In fact, you do not want to put a hammer in Jas's hand. That's not what we do around here. If anyone's seen our studio in the office, Laura Stewart, our VP of Sales and Marketing, is the one who put up all the shelves. But I say that because she
did put up all the shelves.
She put up all the shelves, dude. I didn't do any of that. And the reason I make a mention of that is because with pre-constructions, just like Simeon went over and you articulated it very well, brother, is that you can put these deposits down passively while the builder forces the appreciation and the market also appreciates.
And you haven't closed on a mortgage.
Well, here's what I want to talk about next. Here's what I want to talk about next, buddy, is the flexible exit strategies. Okay, so you're buying a property today. You're investing into a property today for something that's going to close in 3 years from now. Okay? Well, life happens. We want to make sure that we have flexible strategies to either get out or how we're going to close on it. So I want to go over that slowly. And cut me off and let's do our thing here, Simos. Okay.
Right now, I think we're dead on track with explaining every single component of it.
Well, first and foremost, number one, you buy the property today for something that's going to close in 3 years. Easy peasy, you get the mortgage, you close on it. What Simos mentioned is that you don't actually, because you're buying today and it's not built, you can't actually get the mortgage. There's a formality, which is where a pre-approval is needed.
Yeah, you have to qualify.
Yeah, you have to qualify, and our team kind of takes care of that. It's a fully turnkey process with us and a turnkey investment, which we're going to touch on a little bit later. But because you're buying today and it's going to be built in 3 years, life happens. We need some type of security blankets. And so what a pre-construction strategy allows for is what's known as an assignment clause. What an assignment clause is that if you can't close on it, you're allowed, as long as you have this in paper, or like in writing, in the agreement.
And you need to pre-negotiate this.
You got to pre-negotiate. Very important.
That's the difference.
Very, very important. Well, anyone here is not going to be doing this on their own. So, well, I hope you wouldn't try to do this on your own. Even if you don't use us, make sure that you do this. You have a professional doing this with you. But you're able to actually take your agreement of purchase and sale. It hasn't closed yet. You haven't had to get a mortgage, and sell that to someone else. Now, in the last 5 to 6 years, investors have used that as a strategy for profit. And why not? They bought, and we're going to show you some slides in a sec here to show you exactly what Keyspire investors have seen in their portfolio with this strategy. But there's been profits of $150,000. So look, I mean, we've gotten that.
Also, don't think for a second the assignment process doesn't attract tax, strategy, and foresight. So yes, it's an exit strategy for profit, and it can be very lucrative, but it is far more complex than what we recommend is the buy and hold.
Right.
But as an exit, an early exit, or if you have to,
well, that's what I said.
It's a beautiful thing.
And look, I like calling it, and we like calling it, a security blanket.
Yes, that's what you did.
Something happens, right? In case something happens, you can get out of it. Here's actually what I actually use as my second exit strategy. So the first one is buy and hold, as Simeon mentioned, because to create real wealth in real estate, I mean, you're in a day and a half of some amazing, the world's best education with Keyspire already. You know that real wealth is created in real estate by holding on to it. You're not trying to time the market. I'm taking this straight from my boy Scott McGilvey. You don't try to time the market. You want to put time in the market. The longer you put in the market,
that's big.
The bigger the wealth, and the more wealth you're going to create. However, if you cannot get the financing, if you can't close on it, my second exit strategy, because I leave the assignment as the third and the security blanket, is doing a joint venture. So for example, I'm coming up to closing in 3 years from now for something I bought today, and if I can't close on it myself, I'm gonna call my boy Simeon and say, Simeon, hey, would you wanna partner up with me? Look, I put the 20% down.
That's right.
Maybe you don't even have to put, and here's so many ways of doing joint ventures, reach out to us at any time, but I mean, the crew around here will talk about this for days. Hey, Simeon, would you wanna, look, I put the 20% down in that example. Would you want a joint venture? You get the financing under your name. I'll cut you into the deal at 25%.
And the place is worth 100K more. So you're going to get 50K of baked in equity. Or I'm going to
give you 25%.
That's right.
Because
whatever.
If I have a lineup at 25%, maybe I'm offering too much. Here's a little negotiations 101. It wasn't really planned, but if I have a lineup of 50 people being okay with 25%, maybe I'll offer 15% or 13, my lucky number. Or I say to Simeon, you know what? I did put the full 20% down. You put in 50%. We both get the financing, which will allow us to go create more wealth in terms of getting leverage for other properties. So here's the 3 ways. You see it on your screen, but we want to quickly recap. You have to buy at first access pricing. The other way you win is that there's an extended deposit structure and the fact that you have flexible exit strategies. I want to speak about our specific due diligence when we're looking at a project. Because out of that 200 of investment properties, I'm going to say it's safe to say for the last 7-8 years, we get probably 50 projects, new build projects every year. Okay, at our table.
For sure.
Out of those, we only get loud and boisterous, and you see the Indian guy wave his hands all over the place, about 6 of them a year, okay? And the reason is because 44 of them do not pass our REC due diligence. And number 1 being the location. Can't pick up the building and move it, period. We need to make sure that all the numbers that Simeon went over earlier about the supply and demand, what's happening in the market that you're thinking about investing.
Yeah, well, I mean, we have to run the rent projections. So if rents are having downward or upward pressure, those are the indicators that we look for. If we know the rents are going to go up due to development, due to a new subway station opening, due to a million different factors, we hone in all our sites onto those locations. And when we get those sites on the table, we call the developer, they have to give our clients, we don't care about other people's clients, specific incentives. So when you said the assignment, to be able to lease it during a time called occupancy and all these other different things, unless those items are negotiated beforehand, you're never going to see the project. It could be the best project in the world. But if you can buy it and life happens and you can't exit, it's no good to you. It's a disaster, actually.
Now, number 2, you spoke about the builder.
Yeah.
Within our due diligence, we get 50 projects, get only loud, and start talking about 6 of them every single year. Number 1 is location. If we're not happy with it, we move on. Number 2 is the builder's reputation. Yeah. Are we as investors being used as the guinea pig for a project, for a builder, or has this builder do they have a bad reputation based on other properties that they've built? We get the opportunity with our team to walk into all these buildings that have been built. We get to see the finishes. Also, we like to look at the Terry on home warranty, the website, the record. Look, I mean, on Terion's website, you might see someone mentioning that there's nails popping out of my ceiling or something. Like that stuff is not what we're looking for. We're looking for, was there structural damage that the builder didn't fix? Because that's a problem, and we don't want to touch it with the 6-foot pole.
You're going deep, bro. You missed one of them. Like, does this builder have money? Are they well capitalized?
Can they actually build this thing?
Can they actually build the building? Have they built before? Have they canceled the project before when the investors put in their money 2 years ago and then they get a letter in the mail saying bye-bye?
Well, I hope the community understands how passionate we are. You can see Simeon getting very passionate.
Well,
this is what we do.
I know,
and we're here to protect people to make sure that doesn't happen.
Correct.
Number 3 is the incentives, and I quickly want to go over this. The incentives we're looking for investors, okay? But again, has to be first access. If it's not first access, we will not talk about a project. It's just a waste of our time and a waste of everyone's time, specifically yours. Number 2, do they give us that right to lease during occupancy? What does that mean? Well, there's 2 stages to a closing to a new build condo.
That's Ontario specific.
This is Ontario specific?
Is a legal type of ownership right before you actually own the building. So it's Ontario specific.
And some builders don't let you rent out the property between occupancy and registration.
Because it's not officially yours.
Exactly, which is generally a 4 to 6 month period. Could be a little bit less, could be a little bit more, but generally 4 to 6 months. You're going to be paying an occupancy fee. If you can't rent it out at market rent, well, it just doesn't make sense as an investor in our opinion, because you're actually putting out cash and not getting anything in. The third incentive we're looking for is, do we have the right to assign? Remember we spoke about that security blanket? Some builders don't give us that in writing. We are not touching this project if they don't give us that incentive. Number 4 is cap development charges. Look, we're buying today something that's going to be built in 3-4 years.
What are development charges?
Development charges are charges passed on from the city to the builder, and the builder passes those on to the purchaser.
And those are typically for the infrastructure, meaning that when they put the permit in and they need to bring in sewage, they need to bring in power, they need to bring in all this infrastructure, the city's not paying for that. The city, not only do they not pay for it, they put a premium on it and pass that on to the builder. The builder now has to do their pro forma. And what we do is, let's call it that comes to about $30,000 per suite, the development charges.
Yep.
Or the educational levies, or whatever the case we want to call it, parkland. So whatever those charges are, because we know, because we've done this hundreds of times, because we've been caught in that trap in the beginning of our career with our own investments, we negotiate a cap. So saying that I'm going to negotiate bulk 20, 30 units of this amazing development. Yes?
Yep.
I want a cap of $8,000 for 1 bedrooms, $10,000 on the 2 bedrooms, $15,000 on the 3 bedrooms, and so on and so forth.
And if it's more in 4 years, you're capped, you're protected. More than that. It cannot be more than that. So those are the incentives. I think it's very important because, again, we've been in this community with Keyspire, very, very blessed to be part of this community. The amount of people we've met, they become family, they become friends. I'm seeing the chats, and it's so nice to see such familiar faces. I think they're saying Jas is the better looking partner. I think I'm winning that one.
I think you're colorblind or you're blind.
It's coming up. Anything. Donna is saying, yes, it's Jas. Okay, so we're winning that. And so the reason I mentioned that is...
How can this be even happening?
Well, this just always happens, brother. Okay, so here's some past projects that I think is very important to discuss. What has happened in these type of strategies? So back in 2016, at a summit just like this, investors, Keyspire members...
I'm still caught caught up on the good looks.
Well, we got about 10 minutes here.
Ingrid's my fan. Ingrid says, love Simeon's passion. Yes. Yes, Ingrid.
There you go.
We're together.
Both are handsome.
Go.
Well, somebody's calling Jazz's one sexy.
No, they're not. Go.
Okay. Anyway, so 2016, just a summit just like this. We had members purchase into River City condos. Okay, it was a project that was funded, and we had all three levels of government invest close to $1 billion in this project. It's in the Distillery District of downtown Toronto. Purchased on average for about, I think it was a little over $350,000. They're today, okay, this was back in 2016, purchased for $350,000. They're selling now for close to $625,000, a profit of investors who've kept this now. And that's the secret. Did they hold on to this unit? They're enjoying $275,000 worth of equity in their portfolio and making sure that they had all these exclusive incentives. The next project that I always like to speak about was less than a 5-minute walk to the TTC subway, major transit outlet. It was Transit City on the northern part of the Greater Toronto area, purchased back in 2017 on average for about $400,000. We're looking at about $700,000 in value right now for those units. We had close to 20 members invest into that project and profits of about $200,000 that they're seeing right now. I think there was about 490,000, I apologize, was kind of the average that people were seeing. So today, we got not much time. We are going to go over this before Amanda comes in here.
I do have to bring one point.
Go, buddy.
And that's from the River City project that you mentioned.
Yes.
River City, which is located between the Distillery District and Toronto, specifically on the West Donlands. This was, when we talk about government infrastructure, this was swamp. Half of it was brownfield swamps, meaning it's polluted and needed cleanup. And we had three of the biggest developers in the country partner with the government who put hundreds of millions of dollars into the cleanup and into the revitalization of the area and built a master plan community of over 14 mid-rise and high-rise towers today that took the values from that $325, $350 when we sold these units, and we have multiple units. We actually have units in every phase personally. But all the members, and we had over 60 across the phases,
the 4 phases
of our own clients in there that bought it $350, $400, whatever the case may be. Those are all worth $550, $600, $700, depending on the unit, $800,000.
And majority of them did take our advice and they held on to them.
Yes,
and they refinanced
but this is because so there's appreciation, there's appreciation.
And with that, my friend,
Amanda's
going to give us a little bit of hook, but go.
I definitely want to remind everyone something very important. This is the Keyspire Investor Summit, and every single one of you are here to further your agenda, meaning to learn more about real estate investing if you're starting out, to get more savvy if you started off a couple of years ago, to get into more complex deals if you're a more advanced investor. But you're here to do deals. You are surrounded by them. I don't care if pre-construction is right for you or is not right for you. You're here to take action. You've already taken a massive step just by being here. But take advantage of the knowledge, depth, and experience that this summit brings. My favorite event of the year, and we do events across the city, across the country, on many different levels. This is by far my favorite event to be at because of the energy and the focus on investment real estate. So I hope that we've brought you value. I hope that our Keyspire and REC Nation continues to grow and continues to work cohesively with each other in growing and making more deals.
Go to reckeyspired.com. That will take you directly to our website with all the information. All you got to do is put your contact info there. Awesome. Thank you.
Wow.
Thank you, Amanda.
That is incredibly powerful stuff. So much love for the REC team.
So much love for you.
Let's see it in the chat here, guys. One more time for Jas and Simeon and their entire REC team as well. Not only are you guys great, your team is great, your investments are great. I have nothing but amazing things to say about all of you.
Thank you.
It is always our pleasure to be here, Amanda. We love you. All the best with your beautiful bundle of joy that's coming.
Are we giving air fives?
We can do an air high five.
Okay.
Thank you so much. And this info's at your booth this weekend, is it not?
Yes, it is. Yes,
Okay.
it is. In fact, if you click the banner on the tablecloth, it almost looks like at the bottom.
Yes.
It says exclusive opportunity. You can also just click that as well, or you can go to reckeyspire.com or just click, like Amanda said, right in our booth. But Tyler Tai is there. I know Laura's going to rush and get her computer set up and everything ready. Our team is ready and waiting. So we're good.
Guys,
and they're there to answer all those questions.
All your questions.
we thank you so very much. Thank you for hearing us out. Thank you for choosing to be here. I hope all of you take action. Be well.
Take care.
Thank you again, guys.